So I think the big question we're all trying to figure out with the conflict in the Middle East heating up, what is the worst case scenario for oil prices, do you think?
Well, if I could just delve into that a little bit right now. Secretary Donald Rumsfeld of the U.S. in 2002 created this Rumsfeld matrix. He said there's things we know that we know, there's no knowns, there's known unknowns, things we know we don't know, and then there's unknown unknowns, things that we don't know that we don't know. And that's kind of where we're at right now. There's so many things here, so many other factors that are really playing into the upside risk in oil prices.
Okay, so there are lots of things we don't know, but the big question then, I suppose, the corollary to that is, if oil prices do go up, how will that hurt consumers and where?
Well, we'll definitely see consumers hurt on the transportation fuels, whether it's gasoline, diesel fuel, especially coming into the shopping season, the holiday season, across the world, and then jet fuel, which has been on the rise and back to levels we've seen pre-COVID. So that's where you'll see the biggest pinch if we see oil prices go too far, too high.
Carl, today we're reporting all about Brent surging past $80 a barrel. But in the initial aftermath of Russia's military operation in Ukraine, the benchmark Brent hit nearly $130. Do you think we might see a repeat of that kind of level?
It's very possible. If I'd had to say, I think we're closer to $100 than we are to like $70 or $65. Theoretically. I think that the escalation, the accumulation of some of these things that are escalating could really just give us a really short trip to the upside.
Okay. And so for our viewers, because half of Iran's oil exports do go to China, and if Iran's oil infrastructure is indeed targeted by Israel, how does that affect the Chinese market?
That would really just really increase the risk there. We might see a tightening in supplies. The Saudis, when I talk about the Saudis, let me just say the Middle East could be affected overall if there's any kind of damage or any kind of escalation in that Strait of Hormuz. So oil prices could be really sensitive, especially going to the east there to China. Well, you might see some help from Russia. There's always extra production, and even at a worst case scenario, maybe exports coming out of the U.S. But there's a lot of risk going on there.
You brought up the Strait of Hormuz, and earlier we reported that as well. We should note, of course, that never before has the Strait of Hormuz been completely blocked off. First of all, how likely do you think that might happen this time around?
Like I said, there's a lot going on here that, other factors that we're not really sure how it's going to happen. We've never been in a conflict where we've seen Iran really just facing off against Israel. There's been tensions before, but these are really heightened. So if there's something that escalates there and something that has a domino effect, we can actually see something happen that we never expected to happen before.
Okay, and so if that happens, if Iran does turn and block the Strait of Hormuz, what does that do to the global supply of oil? Because we know tankers go through that strait.
That's important because a lot of people have been talking about how there's a lot of supply. The Middle East has a lot of supply. The U.S. has a lot of supply. Russia actually has a lot of supply too. But getting it there, getting it to the people that need it becomes the biggest problem. So that factor, not being able to get it from A to B, is where we'll see that risk and that really escalation of price if these things happen.
So now we're kind of looking at the specter of an energy war perhaps igniting in the Middle East. What can the OPEC nations do to help cushion the oil market?
Again, it goes back down to, can they get it through and around that area if there's an escalation? Because if the Saudis, if OPEC, especially in the Middle East, increase their production, it's not going to mean much if they can't get it out. So when you think about anything outside of that area, you're looking at Russia and you're looking at the U.S. that can divert and go around those areas. But it's going to really make a difference on what happens in that little area there where most of that supply is going to and from.
Carl, the conflict, as we've been reporting, has now, just marked its first anniversary. We're now talking about things long term. What is the effect of sustained volatility in the region on the global oil industry?
The region is very important, but there's so many other factors we're talking about. Russia, Ukraine's on the second year. We have a U.S. presidential election going on in the next month. And we have, China's stimulus really just started to kick in. So there's a lot of factors here that push us more to the demand side. the upside, where we could see higher prices. But if anything goes on in that area where the transportation gets affected, it could be longer term, depending on how bad those areas are affected.